or not? Ready? Tell me when we're going live on YouTube.
We're live.
How long we been live?
No, just now.
Okay, we're live. I was like, yeah, tell me. All right, welcome YouTube. I got TikTok and Instagram down here, so stay there or go over to @SamFasterFreedom on YouTube. What I'm going to do in this live is I'm going to introduce myself here in a minute. Going to talk about the market, give you my unfiltered thoughts on what the market's doing now and what the market's going to do in the next 12 to 18 months. I'm going to give you some training opportunities that are free, and then I'm going to get into the meat of this. This will be in like 2 minutes. I'm going to get into how to invest in a recession. I have things that I'm going to do in the next 12 to 18 months that I honestly think are going to create impact for me and my family for generations to come. The things I'm going to do in the next 12 to 18 months I think is going to reverberate generations to come. That's how excited I am. So if you're just joining me, let me know where you're from here in the YouTube bot chat. Let me know where you're from, how many of my lives you've been on, and start to fill up that chat box with questions, because at the end I will answer every question asked, maybe even a little bit during the actual presentation. So throw your questions in the box. Let me know where you're from. Share this live with anybody you know that is interested in real estate investing. TikTok, Instagram, stay here if you'd like, or head over to @SamFasterFreedom on YouTube to get the experience over there. All right, North Carolina, nice, I see you. All right, so this is what we're going to get into. So let me introduce myself now, and then we'll get the ball rolling. A majority of the views on YouTube come after the fact. You know, we have a few people watching right now, but after the fact, a majority of you are going to be the ones watching. So let me introduce myself, and then we'll get the ball rolling. So my name is Sam. I'm a real estate investor. I own a house buying company here in St. Louis. We are going to wholesale and flip about 300 houses this year. I also own a rental portfolio worth over $42 million. What's going on, Russ? That I've bought without using any of my own money. It sounds like either it's too good to be true, it's lying, it's bragging. I don't know really what it sounds like, but that's just the facts. It's kind of crazy, but I've been able to buy $42 million worth of real estate without spending a dime of my own money, and I'm not over leveraged, and I'm still cash flowing, and I am set up in a good position to deal with whatever the recession is going to come, what it's going to do. What's going on, Kaz? Nice to meet you. You met me at the summit down in Orlando. Well, it's nice to meet you, and then now see you. All right, so the market. Who on here thinks the market is going to go up, go down, or remain flat? I've asked this question for about 12 months now, and for about the last 10 months, everybody said it's going to go on up. The last 2 months, I've been getting a lot of flats or downs. What do you think it's going to do, up, flat, or down? And again, TikTok, Instagram, stay here, double tap the screen. You're all good. If you want to head over to my YouTube @SamFasterFreedom, you'll probably get a little better viewing experience, but stay there if you want. If not, go to @SamFasterFreedom. And make sure you're watching my my podcast as well. The podcast is called The Faster Freedom Show. It's on Spotify and Apple Podcasts, all the places, but then it's also on YouTube. We have the a live actual visual version at The Faster Freedom Show. 2 episodes a week. All right, so I think that the market is going to slightly dip over the next, probably, I would say 10, probably maybe 6 to 12 months. I think the market's going to soften. I think some markets will be hit a little bit harder, but it's real estate, y'all. It's a good investment. It's not a bad investment. It is a good time to buy no matter what. If you buy an asset that dips 10% and then you buy it and then it dips another 5%, that's okay, because overall, it goes up. Look at the charts. Go back and look at the median house price chart online. Every 15 years, real estate doubles in value. So I'm not worried about a little dip now. I'm not worried about buying an asset now that's going to dip. That is short-term thinking, and that is your issue. That is something that is wrong with how your brain is wired. You need to not worry about a short-term dip. If you buy $100,000 worth of, if you buy $100 in stocks, and next year the stock goes down to $85, but then a few years later it's up to $200, you wouldn't care about that $15 dip. I don't think the real estate market's going to be that drastic, but it's the same thing. Stop thinking that real estate is going to double in value or go up 20% every year. The last 12 to 18 months has been an outlier. Get that out of your head. In general, real estate goes up 3 to 6% a year. Overall, it has big spikes and little dips. That's what's going to happen. We're going to see a little dip, but then we're going to be followed by a very big spike. Save this, write this, record this. No matter how much it dips, if it dips 5%, 10%, 15%, which I would be shocked by as a national average over the next 12 to 18 months, as soon as it kind of bottoms out and levels up, it's going to go right back up. And the people that bought now and the people that bought that dip are the people that are going to create wealth just by sleeping. So invest take the strategies I'm teaching you now. The market is something that you cannot control. What you can control is how you invest, where you invest, why you invest. You can control all those things, and you can create a lot of freaking wealth right now, and no matter what the market does, this is a long-term game. So there's my spiel. Don't worry about the market. Stop getting all wrapped up in Meet Kevin's horribly done thumbnails. Get over Meet Kevin's BS. He's a fear monger. So don't worry about like stuff that he does and all these clickbaity thumbnails. The real estate market dropped 23.5% from 2009 to 2011 on a national average. 23% over a 2-year period. So all this 40, 50, 60% drops in the next month or two is never going to happen, ever, ever, ever. Get that out of your head. I'm sorry that clickbait stuff works on you, and I apologize that's where your mind goes, but that's just simply inaccurate. It's not going to drop 40% this year. It's not going to drop. It's never, ever done that. If it does, we're literally in a nuclear war, and you need to worry about surviving, not investing. So that's not happening. Everything's going to be fine. All right. Yes, it will dip, but it will go back up, I promise, and way quicker than you think. All right, now let's talk about free training or just training in general. If you want more information from actual investors that have perspective, I'm a real estate investor that does social media. I'm not a social media WHORE that does real estate. So real estate's first for me. That's why everything's not always buttoned up and perfect. That's where I am. You should listen to somebody that invests in real estate and does social media rather than somebody that does social media and kind of invests. See what I'm saying? Maybe the presentations that those people give are a little more buttoned up, a little more, sourced from, 80 million people doing research. But the actual investor that's on the streets, living it every single day is the best source, and that's me. All right, if you want that free training, just go to the link below that he might pop up for into webinar. I think you got that popped up. If not, just DM me on Instagram, and I will gladly answer your questions and or give you that free training. So DM me on Instagram, or go to the links in my bio on TikTok, Instagram, or the description, or just DM me on Instagram because we can have a chat. All right, now, that took about 6 minutes, 5 minutes, so now let's get into the recession tips. There are tips to invest during a recession that I am actually going to utilize in the next, I would say, 12 to 18 months. I feel like I'm going to add more net worth than I've added in the past 7 years. So we're not getting my net worth right now. Just know that it's pretty good, and real estate's made it that way, but it's going to go up even more with the things I'm going to do and talk about right now. So if you're on TikTok or Instagram, I encourage you to head over to YouTube at Sam Faster Freedom. Don't leave and never come back. Either stay here or head over to YouTube at Sam Faster Freedom. That's where you're going to get the best viewing experience. You know what I'm saying? You know. See that? That was special, Jaden.
I punched in.
You punched in. Well, you didn't punch in. I just got closer to the camera.
You see that?
You see that? All right, anyways. All right, so the first strategy, we're going to start big and work our way down. You're going to get actionable tactical things out of this presentation, but I obviously want to start bigger. That's what she said. So the first thing you need to do is you need to hold your position. I'm not going to go into too many details, but I put a lot of money in crypto in the past 6 months, and it has not done anything but go down. I mean, I think I have bought crypto, or I bought, Bitcoin anywhere from like 18 to 22, and Ethereum anywhere from like 12 to 18. So I didn't buy it, a bunch of it at like 60 and 50, or when Ethereum was like 3,500. But I want to be like, I put so much money in there. We're talking a few grand a week for a long time, that I'm like, I kind of want to sell. It went up a little bit yesterday. Should I sell and just cut my losses and get out, or should I hold? So as long as you can live the life you want to live, whether it's crypto, whether it's stocks, whether it is real estate, hold your position. Whatever's happening right now, look back at the history of crypto, the history of the stock market, and the history of real estate. It always goes up. So the most important thing I can tell you right now is to hold your position. Do not move along. Do not sell just to sell. Do not think you're going to sell and cut your losses. As long as you can have your paychecks and live the life you want to live, hold your damn investments, hold your assets, because they will go up in value. I promise, even if they dip a little bit, they will go way, way, way up. Don't try to time it, sell it now and think it's going to dip more, and then just hold your damn position, okay? That's the very first thing I can tell you, and probably the most important. The second way to invest in a recession and create wealth in a recession and create active income in a recession is to get cash. Now, duh, right? Get cash. Well, I'm going to give you a strategy to get cash because you can't just like, and cash comes out. See what I did there? That's not how it works. You actually have to work for the cash, right? So the best way to get cash that I know of right now is to wholesale. Now, I'm not going to go over it in super detail right now, but wholesaling real estate doesn't require any money. Wouldn't it be good if I was better at writing or no credit? There's no risk too, but let's not get into that. No money or no credit to wholesale real estate. Wholesaling real estate is getting a property under contract to purchase and then selling that contract to somebody else to close on. So you don't need any money or credit. You're not closing on it. You're not rehabbing. You're finding a distressed property and you're getting it signed on, and then you're just handing that to somebody else who's going to close on it, and they're going to close on it. They're going to take the risk, and you get paid a fee for doing that. It can be $500, it can be $50,000. I think the national average wholesale fee is 20 grand. So work on wholesaling real estate. DM me on Instagram. I can give you more resources there. Google how to wholesale. Look it up on YouTube. Look at my YouTube. I have podcasts on it as well. Just learn how to wholesale and get the cash. That is extremely important. You get the cash, and then when you get the cash, assuming you are able to live, you need to invest that cash. That's 2A. 2B is invest cash. And I'm a real estate guy, but I also want you to have the best chance to create financial freedom and create wealth. Let me know where you're from in the chat box on YouTube. If you have not, throw your questions there. I'll get to them. And also share this live and give this video a like. If you feel like you're getting any value or you've laughed, give this video a like on YouTube. People on TikTok and Instagram will literally do this for 5 minutes straight. On YouTube, you just click the like button once. So if you could please give this video a like, it would help push us out further now as well as after, because this is going to be saved on my YouTube at Sam Faster Freedom. So give this video a like, share with your friends, comment where you're from, and comment your questions. Same down here, double tap the screen. You can hang here if you want, or go over to YouTube at Sam Faster Freedom. That's where I'm giving the live experience. All right, so invest that cash, and in order, this is where I would invest my cash. I would throw some in crypto, I would do stocks, and I would do e-com, and then I would leverage. Leverage is spelled right. Actually, leverage would be first. So the first thing I would do is I would leverage that cash to borrow more money. What do I mean by that? I tell you all the time, find hard money lenders, find private money lenders to buy rental properties without using any of your own money. Some hard money lenders, some private money lenders require you to put 5% down, 10% down. Go to fasterfreedomcapital.com, fasterfreedomcapital.com. I have my own lending company. It's a hard money lending company though, so we require 15% down. We'll fund the rest of it. If it's a $400,000 investment, we will fund 85% of that. But you need that other 15%. Or use a private money lender for that, or use a private money lender for the entire thing. Regardless, you can borrow all, if not a majority, of a real estate investment, but having cash will allow you to come up with the difference, or having cash will allow you to, just be a better borrower. I know some local hard money lending companies, they want 10 grand liquid in your bank account. You don't have to use it, they just want it there. So get the cash from wholesaling and leverage it to buy rental properties, number one. And then you don't have to ever spend it or spend it in the short term. But then I would throw some money in crypto. That's just me. Do whatever you want. I would throw some money in the stock market, and I would look into e-com. So I don't think you have to throw your whole wad at any of that. I think just a little bit, investing $20 a week if you're actively wholesaling in, in Ethereum and Bitcoin, and then put a little bit in the stocks, and then e-com usually requires a little more investment, but not always, and then leverage it. So that is step 2A and B. That's what I would suggest doing. Now, let's talk a little bit about interest rates. Interest rates. 3 is interest rates. So, are interest rates high right now? What are they? Are interest rates high right now, or are they low right now? Give me your answer. I want to see some type-ins, high or low. Again, if you're on TikTok and Instagram, that's great. Stay there, or head over to YouTube at Sam Faster Freedom. That's where I'm a little more active. Double tap the screen. We're at 7,900 likes. Let's get those up. So interest rates, no, not if they're going up or down. Are they high or are they low right now? What are some votes? Throw up the chat on YouTube. What are we saying, high or low? Gosh, my arms look little on this TV. Can you do anything to make my biceps bigger? I have a 6-month-old, so I haven't really worked out. I'm getting back in the gym starting. thing this week. I'm getting back in the gym. I never had huge biceps, but they did not look like this. Just give me,
The tries are weak, man.
the tries are weak. Anyways, just give me a little time. We'll get back in there. 6-month-old, not sleep, and the last thing you want to do is work out. But anyways, all right, so everybody said interest rates are high. You're wrong. No offense, don't get offended. I know we live in an offending market, an offending world. But overall, historically, real estate rates are low, or they're average about right now. The historical average over the past 50 years, I think, is like 7%, 8%. So historically, interest rates are average. However, look at the past 12 to 18 months, they are way up. They've doubled this year, which is insane. I was dead wrong when I said that they would go up 1% or 2%. They've gone up 3 and 4%. They have doubled, which I was so wrong about. However, at the beginning of the year, if you told me interest rates would double, I would think the market's crashed. It hasn't crashed, it's softening. The reason it's doubled is because the Fed is just trying to stop the market growth, and they don't have a point. They're not saying we're going to stop at 7.5. The Fed's going to raise rates until the market reacts and stops buying, and then they will lower the rates again. That's what they're doing, I promise. They're not raising rates to screw you over. They're trying to slow down the market, and it's working, but the market has not slowed down enough. So they're going to do this, and as soon as the market slows and starts to rescind, they're going to hold it. And then if the market doesn't bounce back up and the market continues to rescind, they're just going to lower rates until people start buying again. That's what's going to happen. I know a lot of other magic tricks that people are trying to pull on you, but that's just simply what's going to happen in my opinion. So interest rates are higher than they have been, and it's really a lot harder to cash flow right now. So what do you do about these higher interest rates? What do you do about them, all right? So the first thing you need to do is you need to shop them. Shop interest rates. I went to a small local bank here recently in St. Louis. I went to a few of them. I was quoted 6.25% all the way up to 7.5%. Now these are on commercial loans. These aren't your retail rates that you see all over the news. These are based off of the Fed's funds rate, and these are based off of not what your traditional mortgage rates are based on. So I was quoted a whole 1.25% difference, which is probably like, I don't know, $125 a month. So shop your rates around. It makes a difference. Small local banks can literally charge whatever interest rates they want. The Feds, they could charge 15% if they want. So if they want to win your business, look at the chart you're seeing on Instagram or on YouTube right now. Pull that chart back up, Jaden. That chart shows that's not interest rates, that's values, but that shows, are you pulling that back up?
Yeah.
All right, okay. That shows that real estate has doubled in value every 15 years. So that's what that shows you. Every 15 years, real estate has doubled in value, even buying it in the height of 07. So anyways, just wanted to show that. That can go away. That just shows you real estate doubles in value every 15 years. So shop the interest rates. I am able to cash flow very well at 6.25% still. I just shot a YouTube video about that, so that's coming out next week. However, it's pretty hard for me to cash flow at 7.5% with what I'm buying. If interest rates that I get quoted and I have to use are 7.5%, I'm just going to have to buy deeper, and I'll explain about that here in a little bit. So shop around. Small local banks can charge different amounts. The second strategy that you're going to want to do is you're going to want to buy deeper. That's what she said. Buy deeper. Naturally, if you're financing less, your mortgage payment and interest payments are going to be less. And guess what? You can buy deeper right now because the competition is very, very scarce. It's still out there. People like me and people that actively invest and understand how the real estate game works are still buying and still buying at a high rate. But those weekend warriors, those people that don't really know what they're doing, those people that came into the game because it was so easy are gone or leaving. So it is much easier to get deals if you know where to look. And again, DM me on Instagram, follow my podcast, TikTok, YouTube, Instagram, follow me everywhere. I got a mentorship that talks about it. There's thousands of hours that I add to every single month of free information. I have a mentorship that has $175 million owned in real estate in it, meaning between the coaches and the students, there's over $175 million in real estate owned in that mentorship. So it might be the best it's the best mentorship in the country, but it might be the most robust mentorship in the whole country. You don't need loans for wholesaling. Nobody said you need loans for wholesaling. Chaluda boy, ow, that hurt. Oh my gosh, my muscles are so big, they're growing. All right, anyway, so buy deeper. I know that sounds simple, but it's much easier to do than you would think these days. So that is much easier to do. And the other thing, the most important thing, is rental rates. rental rates have gone up more than interest rates have gone up, which might surprise you, but I've done the math. I can spit it out now, but I don't really need to. Rental rates have gone up more than interest rates have gone up, meaning if it costs you X amount more every single month in interest payments, you get X plus probably $50 more if you're charging actual rental rates, as Jaden's putting on the screen. See, TikTok, Instagram, YouTube's getting graphics and things, so head over there. However, just know that as a real estate investor, you're a business owner. And what do business owners do best? What do business owners do best? Throw that in the chat box. Throw it up there. What do business owners do best? Adapt. That was good. Adapt. That's not the answer. That is an answer. But anyways, I was being a little sarcastic, but Jaden gave Gary the answer. Business owners adapt. The best ones do. But what do business owners do best? They pass expenses on to the consumer. Do you think Ford is losing money on all the cars they build? No. They're charging you more because it's costing them more. Do you think the grocery store that you go to is losing money on groceries? No. They are just being charged more to get the groceries, so they are charging you more to buy the groceries. Shoes, clothes, everything that's gone up is the manufacturers or owners or business owners passing expenses on to the consumer. And they still make their 10, 25, whatever, 5% profit, 10, whatever profit margin they make, they're still making those profit margins. They're just charging the consumer more. Same with real estate, your consumer is your tenant. Now, you can't just charge them more to charge them more. That's not how it works. A lot of states don't allow that, and you're not going to get it rented. You're not going to get it rented by charging 20% more than you should. But you need to follow the market. The market has gone up drastically, and if you follow that and you charge, if you're getting 6.5%, 7% on your mortgage, and you're charging interest that the market is giving you, or if you're charging 6.5%, 7% is your mortgage, and you're charging what the actual market rental rate is, you will still cash flow as much or more than you did last year. Let me repeat that one more time because that's very important. If you are getting interest rates of 6.5%, 7% on your rental property, whichever you are charging the actual market rate in your area, it is very, very likely that you're able to cash flow more than you were at 4.5% last year because rental rates they were there and now they're here. So just follow the market. Don't listen to the fear mongers. Meet Kevin, Graham Stephan, all these people. Their main source of income is YouTube. So if they're not getting YouTube views, they're not making money. YouTube is not my main source of income. We made $680 on YouTube last month. So I'm not trying to get your views. I make about 80 cents a day on TikTok, and I don't even think I make money on Instagram. So my income comes from real estate, not from getting you to watch this. I would like to help you get to where you want to go, but just have that perspective. Meet Kevin, Graham Stephan, all these other fear mongers. You click on a video that says the world ending. If they have a video, they've done studies, look them up. The world is fine, the world's ending. You click on this 10 out of 10 times. So they make videos that say that the world is ending to get you to click on them. And it works. And that's fine because 90% of the videos I've seen people like that make, they say the world's not ending in the video. But my issue with it is the clickbait thumbnails. A really good video is going to get a 10% click-through rate. What does that mean? That means if YouTube shows a million people meet Kevin's thumbnail, 900,000 people do not click on it and 100,000 people click on it. So that means 900,000 people think that by the title and the thumbnail that the world is ending, and it's not. Everybody thinks it is. There's a war going on. There's inflation. We've been through wars. We've been through inflations. Shoot, there was the Cuban Missile Crisis. There was missiles in Cuba. People in like 70s or whenever that was, 60s, 70s, they would like literally go under their desk as drills. Like we do fire drills. They would do nuclear war drills. So that's the world that has been. We're not even close to that. Yes, things are a little bit worse than they were, but if you have some perspective and you understand that everybody thinks the generation before them is the worst generation. Everybody thinks that their generation is the best. Everybody's scared of China. Everybody's scared of Russia. Everybody doesn't like wars. Inflation was like this in the 80s. we've all been through this. Human history's been a long time. We're not at the worst period ever. Just have some perspective and get over that fear. It's hard, that's what she said, and it's not easy, but it's how people create wealth. It's how wealth is created and how people separate themselves during times like this by having a positive attitude, positive mindset, and perspective. Perspective and knowledge go a long way in thinking for yourself. All right, how's that for a soapbox, J-Dog?
That was amazing.
All right, oh,
Q&A?
Q&A, what do we got for Q&A? I will repeat the question. TikTok, Instagram, stay here, or head over to Instagram, TikTok, Instagram, head over to YouTube if you want to see the questions, or stay here. I will repeat them. Show me some questions. Jaden, next time we need to make my biceps look a bit bigger, because I don't want you to make them bigger than they have been, but they just need to be what they used to look like. Nice little pump. All right. Would you invest in a property that is not cash flow with today's interest rates? I would, because I have 273 other rental properties that are cash flowing positively. So I don't mind breaking even on a rental property because the cash flow, wealth isn't created with cash flow. It's created with, properties going up in value. Even if they dip, they'll go up, and then the mortgage is getting paid down by the tenant and tax savings. So even if I have a property that breaks even on cash flow, I'll still get the depreciation and tax saving, and my tax bill will be less. So yes, I would, but if you're a brand new investor, I would not have your first rental property be break even. If you're doing that, I would make sure to wholesale it and flip and get 10, 50, 30, 40 grand in the bank so you're not hurt every single month. But I would not have my first investment property break even. But you can still have them cash flow. My students are adding cash properties every day that cash flow. Got a YouTube coming out next week about how I just bought a rental property that's cash flowing $250 a month at 5% interest. All right, next one. What is your normal spending on marketing? So, what's up, Thon Win? Did I say it right? Thon Win. All right. People mispronounce Prim, so obviously don't take offense to that. P-R-I-M-M. People say Prime all the time, or Prim. So anyways, my name is Sam Prim. However, we spend, depending on the month, 30 to 40 grand a month in marketing, but we buy 300 houses a year. And majority of our buys don't even come from marketing spend. We're going to buy 200 houses this year solely on marketing and networking with wholesalers and real estate agents and connectors and contractors. So you do not need to spend a dime in marketing. If you want to buy less than 10 or less houses in 2023, then don't spend a dime in marketing, spend your time networking. What else we got? How can I build a team for the BRRRRs? Well, you have to go through the BRRRRs method yourself, but the first thing you do is go to your local meetups. Go to meetup.com, look them up on Bigger Pockets, just Google them, ask other investors, go to your local meetups. You're going to build your entire team there. You go to local meetup, you're going to find insurance agents to work with, contractors, wholesalers, rehabbers, general contractors. You're going to find insurance agents. Did I say that one? Bankers, hard money lenders, private money lenders. Your entire team is going to be built at your local meetups and on your local Facebook groups. What are resources you would use to begin wholesaling? I would use Facebook groups and real estate agents and other wholesalers and meetups, and then my YouTube. All right, one more. Probably three more, fine.
There's a lot.
Do you renovate yourself? All my properties in St. Louis, so I just invest locally here. A lot of my students invest remotely in other markets. But yes, I don't do any of the rehab myself. I haven't even been inside my last 50 rental properties, so I don't do any of the rehabbing myself. We have a team and crew that does that. How much appreciation do you need to refinance? You're not going to get much appreciation, Peyton, when you refinance. You're going to get that equity from buying at a discount and then adding value. So, you just need to have 80% loan to value, meaning if your property is worth 200, you need to be all in at 160 or less. If your property is worth 100, you need to be all in at 80,000 or less. So you're going to get that equity, not through appreciation on the refinance, but you're going to get that equity through buying at a discount and adding value by rehabbing. Would you rank a HELOC with a hard money loan, private lender? So private lender is number 1, hard money loan is number 2, HELOC is number 3, bank's number 4, but they're all used for different things. You're not going to use your bank for your initial purchase and rehab. If you're talking about long-term funding, banks come first and only. So to buy and fix up a property, you need to buy and fix up a property, you need hard money lenders, private money lenders, HELOCs. Long-term financing is banks. How much money is okay to leave in a BRRRR deal? As much as you're comfortable with. Cam, who used to work for us, started investing in real estate 2 years ago. He bought 35 rental properties in his first 2 years with kind of what we taught him. he brought out, he refinanced over 200 grand in his first year, meaning every single bird deals he did, he was able to pull out enough money that equaled $200,000 in his first year of investing. Now, yes, it was a hot market, so take that with a grain of salt, but as long as you can cash flow, pull out as much cash as possible. Learning from scratch, I threw away $250 monthly allowances on investment scam. Sorry to hear that. I hope you can give me advice how to start. Yes, so how to start, just DM me on Instagram. I'll give you my free training. I have a mentorship that's extremely inexpensive that can show you what to do. You can learn from free on my YouTube. I literally have thousands of hours on TikTok, YouTube, and Instagram, mainly YouTube, and then my podcast as well. So make sure that you are following those resources and DMing me on Instagram. I can help you get the ball rolling for sure. I do not think most of this works in the UK. I think in general, the principles of buying discounted properties, borrowing money, fixing them up, selling them work, and wholesaling and those type of things work over there, but I don't know the laws, the tax ramifications, the actual nuances to make it all work. So it's similar, but probably different. Would you flip a single family home now? Yeah, I mean, we're flipping now still. Yeah, the market's fine. In St. Louis, the market hasn't even been affected yet. It's a little bit slower, but we're still getting 100% of list price. The coast hurt a little bit harder, so it really just depends. Does the rent arbitrage I create? No, if you're arbitraging, that means you don't own it, so you're not making any equity besides just cash flow. All right. Thank you for being here. I will see you next week every Wednesday. We did it for a while. We're going to every